Do you remember this video? Gold to 4,000. It was from February 2023, when gold was at 1,878. And we laid out the case exactly in that video. What do you think happened? Almost no one interested. In March 2023, I showed you exactly which breakout I am monitoring. No one interested. Then in April 2023, Mark Koops and I showed how you could practically buy physical gold, not paper gold, using the company Silver Bullion. No one interested. And before all that, I made what I think was a very interesting video explaining how Sweden was actually the first European country to print banknotes in 1661. That's a good 100 years before there even were banks in the US, for example. It showed the disaster that followed issuing banknotes, basically fiat. It didn't really work out, and there's a huge lesson in it for today's real risk of fiat collapse and how gold protects against it. I'll link that video in the comments. You guessed it, no one interested. Well, someone was, because this is the gold chart now. But Larsson, it's only up 100% from the breakout. Then you don't get it. With commodities, leverage is a sound strategy, because there won't be a minus 99.9% scam week in gold while you sleep, unlike in crypto, as a lot of people discovered a couple of weeks ago. If you think crypto isn't volatile enough, you can try 500x leverage on wheat. The CTO Larsson members of course got notified when the breakout happened in March 2024, here just above 2,000. The general public, who weren't interested, what did they do? Now, after gold has pumped to 4,300, now people are lining up in Australia and all over the world to buy gold. What date was this from? So October 16. October 16, that was here. There people are interested at the Pico top. From the next day, it then dropped minus 8.6%. If we look at the Bitcoin chart for a moment, people always ask me, how can the majority of people lose money in Bitcoin when the chart looks like this? Well, here you have it, folks. It's not only in Bitcoin, it's in everything. No one is interested in the beginning of the trend, when it's actually time to buy, like on this gold flip or on the breakout. Then for years they are not interested. That first video I showed you is 3.5 years old. But then at the exact micro top of the parabola, retail is buying. And the influencers? Now, at the Pico top, influencers are adding commodities, because now the audience wants content. You have to think for yourself which tools to use and who to listen to. I said it from the start, I'm not here to give people what they want to hear. I'm not here to be liked. I'm here to try to help you get actual results. And the person I've learned a lot from in the field of commodities over these years is Mark Koops, the real Koops. That's the guy who guided me through much of the fundamental side of this. Now Mark is doing the Pro Portfolio commodities for us in Larsson Line Pro. All in gold trend and another breakout this week. So congrats to those of you who have followed that. Mark is doing that for free for us, but he has his own more in-depth commodities service as well. So those of you who want more from him, definitely check that out. He has a special deal for CTO Larsson members. It's not an affiliate link, I don't have a kickback, he's just great. Now let's call him and figure out what he thinks about the commodities market from here. Koops, great to see you, my friend.
Excellent, thank you so much. Great to catch up.
And congrats to your spectacular analysis of gold, silver, and the commodities in general.
Yeah, I think we had a lot of things right. I mean, if you look at gold over the last couple of months, I mean, it has been going quite parabolic. 2 months ago, the price was around 3,300 US. Last week, it was close to 4,500, 4,400. So if we see that types of moves, I mean, clearly we are in a massive blow off top top phase, gold has pulled back, silver has pulled back. In fact, all the precious metals have pulled back a bit, and the pullback may not have concluded yet. At this point in time, I feel that if you look at gold, the central banks have been the main buyers of physical gold, as well as consumers in Asia. But if we look at the West, there are not many buyers of physical gold and neither of commodity companies. And so in that regard, I feel also because of the fundamentals behind gold that we still have a long way to go up. But then at the same time, as part of a bull market, we should always be ready for these pullbacks. We've seen the same in uranium. If you recall, last year, uranium topped out at about $105 and then pulled back to about $65. That pullback took about 15 months. And after that pullback had concluded at the beginning of this year, February, March, uranium took off again. I'm not stating now that I expect gold and silver and the precious metals to have a 15-month pullback. I do not. But at the same time, I can also not predict the future. And so I think we need to be simply a bit careful. To my subscribers, I have suggested the last couple of weeks that given the run up, they take profits, and I hope they have done so, because again, these moves are quite historical. If we look at silver, silver is more volatile than gold, but has, I would say, mimicked the price movements which we have seen in gold, but more aggressively. In addition to that, silver is at this point in time in a moment of backwardation. Backwardation means that the price of physical silver is higher than the price of the silver futures. In other words, if you buy the silver today, you have to pay more than if you buy silver in the future. That is, in fact, quite bullish because it indicates that the silver inventories, the physical inventories, are very low, to say the least. And you can check that very easily by going to any silver and gold shop and check what the inventory is which they have of the precious metal. And as such, again, I see that the premiums for silver are very high. They are obviously not reflected in the spot price. And as such, like with gold, while we have this pullback, I do expect this pullback to be of a much shorter time frame than what we have seen in uranium last year. Overall, I would say I remain very bullish on gold. I remain very bullish on silver. Uranium, since our last call at the beginning of this year, has also been taking off. Currently, I feel that we are again a little bit in a basing pattern before the next move up. It becomes more and more clear that even the current delivery contracts cannot be adhered to by the uranium producers, and we see at the same time larger and greater demands coming in. And so ultimately, there is only one way for uranium to go, and that is up.
This video is education, not financial advice. For financial advice, seek out a licensed financial advisor in your jurisdiction who can take your personal situation into account. Do you think there's merit to what has circulated, that is like Chinese central bank that's buying all the gold?
Yes and no. Yes, all the central banks, China, Turkey, Singapore, India, you name it, all central banks have been buying gold and in large quantities. I think that's largely the result of the weaponization of the US dollar as a result of the war, which started several years ago between Russia and the Ukraine, based on the sanctions from the US against Russia. In terms of, is that the only reason that gold is going up? No. In my view, gold is going up, A, because of the fact that there is a large reduction, let's say, in public trust in terms of the US dollar, A, because of the weaponization, B, because of the high inflation. And people are looking in those times for an asset where they have safety. And gold is playing that role. Gold has been playing that role for many thousands of years. In these turbulent times, people flock in that regard to gold. Coming back, the central banks are also continuing to grow their holdings of US dollars. But then at the same time, with a US dollar, which is relatively, if you look at it over periods of 10, 20, 30 years, still very strong, it makes all the sense for countries like China to also spend part of those US dollars in favor of their own economy. if you look at the investment in US dollars and US treasuries, it continues to grow. This year it has gone up again with more than 4%. And so I wouldn't say that there is a trade against the US dollar in favor of gold, but I feel that there is just a matter of safety in terms of an additional asset class for investment compared to the past, when those investments were, let's say, significantly less.
Excellent. Thank you so much. I was very excited to hear your outlook from here. A huge congrats and thank you from me and from all the audience. Mark, thank you for all the insights you have shared here to me and to our audience over the years. Spectacular and congrats. Bitcoin versus gold has had a small recovery the past couple of days, but it's a long way to go to climb back up to the breakout levels up here, which is what I will watch. Bitcoin as such has a small recovery today, but previous days these similar pumps have faded. It needs to do more than this to resume bullish continuation. Still a positive sign that there is buying interest around this key support level. Speak soon. Thank you, tack.
Thank you, tack.
City och Larsson out.